everyone, welcome to Moneycontrol. I'm your host Nickey Mirchandani and you have tuned into IPO Watch. We're going to be talking about BLS E-Services, a digital service provider which has come out with its initial public offering on Jan 30, which is today. The company intends to raise around 310 crore, all of which will be in fresh issue. Price band is in the range of around 129 to 135 per share. But to know more about the company's strategies, financial outlook, we're being joined by Shikhar Aggarwal, who's the chairman and the non-executive director of BLS E-Services. Hello there. Thank you for taking out the time and having this conversation here at the studio with us. Straight up, tell us first about your business. Basic details, let's get that out of the way. What does the company essentially do? What kind of clients do you cater to? What about your industry, competitiveness, put all together?
Yeah, so definitely, BLS E-Services, which is a subsidiary of BLS International, how this business came about was that in BLS International, we're doing outsourcing of government services, wherein there is a product which is visas, and governments have outsourced that and we collect money from the customers. So we thought that same kind of thing is also happening within states of India, where there are different variety of government services like birth certificate renewal, Aadhaar card renewal, PAN card. Governments need, a lot of customers need those services. Governments want to, provide good quality of service through outsourcing. We have opened our own centers where customers come and we provide these services, and the model is pretty simple. We charge per transaction fee from the customers and we charge a government fee. So government fee is transferred to the government in that behalf. So this BLS E-Services is divided into three segments. First is the e-governance, wherein we work with different states like UP, Punjab, Karnataka, Rajasthan, providing different kind of government services, wherein we have set up operations. Customers come to our centers. Then there's a business segment, which is the business correspondent, wherein we work for major public sector banks like State Bank of India, Indian Overseas Bank, Bank of Baroda, a lot of private sector banks also like HDFC, Kotak Bank, where we have around 90,000 plus touch points spread across India. In business correspondence, we have more than 20,000 touch points, wherein we provide different banking services like opening of savings account, deposits of money. The revenue model is pretty simple. We get commissions from the banks on per transaction. We also get interest on savings account, and we also collect registration fees, on a monthly basis from our merchants. Also, another third segment of this business is assisted e-services. So, we have across India, across these 90,000 touch points, we have more than 400,000 people that come to our centers every day because of the exclusive contracts that we have, whether be it with banks or with different states in India. So customers come for these services. We thought, why not we try and cross-sell and upsell different kind of services like insurances, different products to them. So 5% of the revenue right now comes from that. We expect that also to grow in the coming years.
Sure. The company overall intends to raise around 310 odd crore, all of which is a fresh issue. It is not an OFS, essentially growth capital. Tell us, how do you intend to utilize these funds and what's the objective out there?
Definitely. So we propose to offer 2.3 crore shares for sale. That will all be fresh issue of capital. 300 odd crores will be coming into the company, and we propose to utilize that money into four parts that we've divided. First, a technological advancement for consolidating our new existing capabilities and developing new capabilities. We are a tech-enabled digital service provider where technology is the backbone, our application through which we provide services to all these customers, 4 lakh customers that come every day through 90,000 plus touch points. So one part of the money we want to utilize in that. Second is that we want to develop BLS stores, across these 90,000 touch points. We want to, streamline the operations. We have already started a pilot for starting BLS stores in thousands of our touch points, wherein look and feel will be the same, to the customers that come in already to avail these exclusive services. We want to offer different services like insurances, motor insurance, crop insurance, bank KYC, demat account opening, or products also, like water purifiers, TVs, other things. So, one proposal is, to utilize the money into that. And third is inorganic growth. If you talk about BLS International, over the since the incorporation of the company, we've made 3 acquisitions. We started with a small acquisition of Starfin. Then we acquired Zero Mass, which was a 140 crore acquisition. And then recently we acquired this big regional visa outsourcing company called iData, which was for 450 crores. So going forward, we are also looking at inorganic growth in BLS E-Services, wherein we are looking at allied services which we can cross-sell and upsell to our existing customer base and also expand our reach. We are also into land record registration in different states of India. So we're looking at a lot of variety of different things. We are one of the big parts of Digital India, financial inclusion to the unbanked and rural population of India.
Well, that's extensive in nature, but let's get on more to the specifics of the revenue contribution. You've already made a point, and of course, we're going to touch base on the inorganic bit also in just a bit. Let's first start with the contribution from BC business, that's business to consumers, which has increased substantially from 27.8% in 2021 to a number of 61% in 2023. The e-governance, however, that segment has come down to 34% in 2023 from 71% in 2021. Is that a conscious strategy? Where is the margins? Are the margins more lucrative for BC business at this point of time?
So see, if you talk about from a overall revenue perspective, we did a revenue of around 246 crores last year, which was already a growth of 100% compared to FY22. At an EBITDA level, we did an EBITDA of around 36 crores, which was 157% growth to compared to same annual EBITDA last year. If you talk about 6 months this year, we have already done an EBITDA of around 23 crores and a revenue of around 156 crores. There has been a good growth coming in. If you talk about the revenue mix, BC business right now constitutes 66%. The company that we acquired, Zeromass, last year has led to this growth in the revenue mix. It was not a conscious decision, but definitely mix has changed because of that. But e-governance business also, we are seeing good growth. If you talk about the EBITDA margins, we are doing a 14% EBITDA margin across the businesses. Similar EBITDA margins we see in different business segments. Obviously, in the assisted e-service space, wherein the revenue model is that we take money per transaction base, more cross-selling and upselling opportunities are there. So as and when we get more money, more revenue from the existing customer base, definitely margins going forward will increase and improve.
I get your point, 14% EBITDA margin is what you've stated across the business, and I'm going to get on to that in just a bit, 14%, what explains that, but that's not the question really. The question really is that between the segments also, where is the margin accretiveness more of the three divisions that you have?
So this business is a volume business wherein, more 4 lakh people come to our centers every day. Margins across the spectrum are typically the same. So if you talk about the banking correspondent business, we have 14% EBITDA margins. E-governance business also, the EBITDA margins are quite similar. Whereas in the assisted e-service business, margins are a little higher. Right now the revenue mix of the assisted e-service is only 5%. Going forward, we expect the revenue mix from this segment also to increase a little bit. So margins will improvise in the next.
How much is the difference?
Sorry?
How much is the difference?
I think the assisted e-service I have not really calculated, but I think it is more than 14%. So it would be upwards of 16-17%.
Oh, so assisted e-services at 16 to 17%, e-governance and BC business both at 14%.
Both at 14%.
Okay, so by any chance, do you intend to change that revenue mix?
I think we do not intend to change the revenue mix. Our target is to increase our footfall through the BC business and e-governance business, and assisted e-service business is definitely going to improvise. We have started investing in that business. The same customer base is going to ask for more services. So definitely share of assisted e-service will increase. There is no conscious decision to increase that, but definitely by de facto growth in BC business and e-governance business, that share will improvise and then margins should increase.
Okay, so what explains this margin growth that we've seen from 8 to 14%? Because 2021, 2022, the margins have remained in that trajectory of 8 to 9 odd percent, and then we've seen a substantial growth of 14%. And now with the guidance that we're looking at, it looks like a number which is going to be surpassing the 14% mark that you've suggested. So A, what is the range that we can now look at? And B, what explains that hike in margins?
So From 8 to 14%, I can tell you about the history. After we acquired this company, Zero Mass, the revenue base also grew, profitability also grew. So definitely, because of that, the revenue has gone up, the margin has gone up. Going forward, as we are under the SEBI rules right now, we have announced the listing is going on. We already opened the issue. Definitely, our target is for growth. As from in BLS International also, we were 15-16% EBITDA margins. We grew to 20-21%. In this business also, as any business, target is cost rationalization, economies of scale, including revenues from existing customer base. So definitely, going forward, numbers in the coming years, our whole target is to improvise.
By how much?
Percentage, I think we have not decided or thought about right now. But as I've said, in assisted e-service, definitely margins are higher. But definitely, right now, as we have already under the IPO phase, I don't want to take out any numbers, but definitely margins will improve.
Are we looking at a sub 20% growth or a growth that could be a little higher than that? I'm not asking you to put down or peg a number. Also, I'm not asking you to give me a near-term projection. It could be a guidance, or let's just say an outlook or a trajectory which could be from the range of 3 to 5 years, within that range.
See, this business is also very new for us. We started the business a couple of years back, whereas BLS International now we have matured as a business in the sense we have understood how to rationalize cost. Margins are increasing for us. So definitely in this business also, right now the margins that we are getting is 14% In assisted e-service, the margins are higher. So going forward, as economies of scale kick in, more services we can sell to the same customer base. Definitely margins should go up.
Okay, the reason why I'm asking you this question also is because as compared to your listed peers, even as your margins have increased from 8 to 14%, they're still almost half of what your eMudra, another listed entity, has done. So what explains that lag in the margins performance? And do you think you'd be able to outperform the listed peer anytime soon?
See, eMudra, we have taken it as a listed player. They are a digital certifying authority, also into the financial inclusion space. So essentially, they are also fintech player. We are also fintech player. So definitely, they have exclusive contracts. We are working on a different sphere. We have exclusive contracts in banking correspondent and different kind of services. So as right now we are in the growth space, we are expanding our base, increasing the volume. And I think definitely margins should increase in this business also in the coming years and coming quarters. Definitely, we as international, we have seen our margins grow. In this business also, we see margins improving. Percentage, I don't have the clear visibility how much percentage margin growth we will achieve. But definitely, our whole intention as a company is to grow the company.
I'm sure that's always the case, right? But given more specific details in terms of the financials, 3.5 folds growth is what the company has captured in terms of profit, which seems to be a little bit of anomaly of sorts given the kind of growth targets that you've looked in 21, 2022. So 3.5 folds growth in profits, more than 2.5 folds growth in top line. What explains that, and what can be expected going forward? Because do you think this is the kind of growth which is replicable even for the years to come, or it's just one-off of sorts?
See, in this company, BLS E-Services, if you talk about last few years, we have acquired companies, Zero Mass, Starfin. We started with the State Bank of India, and then we started acquiring other banks like Bank of Baroda, IOB, a lot of private sector banks like HDFC, Kotak Mahindra Bank, Karur Vyasa Bank. So we have seen good growth coming in this sector also. In the last few years, obviously, base was small. We've grown 150% after this acquisition. So I expect growth coming in from both organic and inorganic basis. The money that we are raising is primarily growth capital that will be utilized in acquisitions and setting up BLS stores and technology transformation. So definitely, the growth that we have done in the last few years is because of acquisitions and organic growth. But the growth capital that we infuse into the company will also see further growth coming into the company. So definitely, we can expect good amount of growth coming in.
How much is the range that we can work with?
I think easily, I would say BLS International has been growing at 30-40% CAGR over the last 4 years, 5 years. If you see the trajectory of this company, we grew 150% last year. If you see this first 6 months, we have grown 20-30% already. So I think definitely
CAGR in terms of the CAGR?
BLS E-Services, I don't exactly remember the CAGR growth, but last year we grew 150% compared to...
Yeah, that seems like a small base effect that we've seen. So that's essentially, I was trying to understand that, do you think a 30% growth, for instance, is something that we can look at for the next 2-3 years thereabouts in terms of the CAGR growth, and I'm talking about both on top line and bottom line performance?
Correct. No, I think the money that we are raising is is primarily for growth capital, both for acquisitions, both for setting up stores, and we know that we are a very conservative company, and the money that we invest, we want return on our investment. So definitely, we feel that there will be good growth coming into the company in the next few years. If you see our historical data, I think that what is that I can comment on right now. We are in the listing space, so exact numbers I cannot give any firm date, but maybe if we get more visibility after we set up these plans, we can definitely give you percentages. But right now, we expect good growth coming in.
A range that I'm expecting. I'm not telling you that give me a proper projection or a guidance which I'm going to be you're going to be holding accountable to, but something in a broader space that we can look at.
See, conservatively, we can definitely think of whatever we have achieved till now. If you talk about 6 months, what we have done compared to last year, we definitely, our objective is to maintain that momentum.
Right.
I think from last year, we've already done 20-30% growth.
Right.
So I think I can tell you about historical numbers. That's
right.
Last 6 months, whatever we have done, definitely our objective is to maintain that.
So between 20-30% thereabouts is what one can look at, or normalized basis on top line and bottom line. Very conservative.
Yeah.
So this is the bear case scenario. How about your bull case scenario?
Again, the money that we are raising is primarily for growth capital.
Exactly.
I have not analyzed, but if you see historical figures, we have grown 150%
exactly.
also.
That's exactly what I saw,
Correct.
49%.
Correct. So good, we expect, I think, good growth coming into the company. Exact percentage is very difficult to give right now.
Okay, so 20-30% I'm assuming is your conservative target, and between 45 to 50% is what you've delivered historically, can be treated as your bit of optimistic targets that one can look at?
I think targets internally, we give very different targets to our team than we tell to the external environment. So internally, we are always giving them more targets that, and everyone is working towards. But externally, we are a very conservative company. We want to achieve sustainable growth on a long-term basis. We are not, wanting to achieve growth only in 1 year and next year, we want the growth to subdue. So definitely, we want to grow consistently, sustainable basis and long-term basis.
Okay, get your point, and that was quite a close dodge also, I would say, on your end. But let's understand more about your business model, right? Let's talk about the revenue contribution per se. Your largest customer, which is a PSU, accounts for nearly 60% of your revenue. So there is a bit of concentration risk per se, which has been witnessed as one of the top risks for the company. How do you intend to diversify that? Is there any plan to diversify that in the first place?
No, I think this is very, very important for us. And SBI, which is the State Bank of India, is one of the largest banks. It is the largest bank in India. And the branding, the image of the bank is phenomenal. We started this business actually the company that we acquired, Zero Mass, was the first business correspondent in India, wherein SBI also currently holds a stake. So we started the business with that. We have reached 15,000 plus branches within India. Already, after we acquired the company, we have started diversifying into different banks like Bank of Baroda, Karur Vyasa Bank, a lot of private sector banks like HDFC. So definitely revenue mix is changing. We want to maintain the growth momentum with all the banks that we operate in. So definitely going forward, there will be a change in the revenue mix, and we will see good growth coming in from the other banks also.
But that number has gone up substantially, right? I mean, that's one of the worry also, that 15% thereabouts number has gone up to 60% in the first half of the financial year. So help us understand that how much more of the revenue contribution or concentration can come down to. Say, for example, if you're looking at a number of 50%, for instance, do you think that is workable by the end of the financial year or by FY25 to be precise?
See, we are actually always targeting to grow the company, and we want to increase revenue mix from all the divisions of the company. So even in business correspondent business, we are targeting to increase revenue from other banks, also, at the same time, because there is a lot of growth in business potential. At the same time, with our existing customers also, they keep on adding new services and products. But definitely going forward, as business grows, if the business from other banks grow at a faster pace, definitely revenue mix will change. But our objective is to keep our existing customers happy, at the same time acquire new customers, grow business from all the segments.
So right now, let's just say that there is no aim to bring down that concentration anytime soon? Of course, the endeavor is to get there, but there are no targets per se which have been set by the company that, hey, you know what, by by the next financial year, we'll come down to 50%, we'll have more clients, and by virtue of that, there'll be more diversification at play.
See, we as a company are quite secure and quite trustworthy, and we have a very good relationship with all our client base. Most of the targets that we give to our internal team is to grow from new customers, grow our existing customer base. So we never give targets to reduce market share from any customer. Our targets is to maintain trust, comfort with our customers, and increase revenue from all the customers across spectrum. So definitely we see good growth coming in from our existing customers, new customers also. Revenue mix definitely will change, and could be that revenue from other banks where there is a probably this BC model has not developed fully, develops more in different parts of India. Revenue goes up from that, but we don't set any firm percentages for any of the customers.
Quite your point. Since the company operates in a highly competitive environment and also both from organized as well as unorganized players, what's your cutting edge?
So our cutting edge is primarily, first of all, that we operate in an environment of exclusive government services, both in our visa outsourcing, which is a parent company, BLS International. We have exclusive government tenders wherein there's a product, there's a service that customers require, be it visa counselor services, and government has outsourced that. So we know people are going to come to our centers to avail these services. Similarly, in this business, we have exclusive areas, exclusive states that have outsourced different business correspondent services to us, different e-governance services to us, wherein we have a steady customer base. Right now, we have 4 lakh people that come to our centers every day. For the states that we are working for, we collect upfront money from the citizens. Sometimes banks pay us monthly commissions. So definitely, I think our edge is also, the exclusive contracts, and also technology platform that we have developed over the years, the money that we will be utilizing to enhance that, to consolidate our existing platform, to introduce new capabilities, to develop mobile application. So we are essentially a tech-enabled digital service provider which has a phenomenal reach of 90,000 plus touch points across India, providing different services. We are a big part of the Digital India initiative of the government. We are a big part of the financial inclusion, taking banking to the rural unbanked population of India.
Also, let's talk about the very essence of why you're here, right? The IPO and the fundraising per se, which is a growth capital perspective that you've been talking about. How do you intend to scale up further? Because in the past, the company has undertaken the inorganic route to grow around, and that's where the growth has also been tapped. Zero Mass and BLS Kendra are some of your inorganic expansions. Going forward, now what is the plan of inorganic expansion? Have you zeroed down on any companies? What kind of growth, or let's just say if you've identified that companies, this will take care of your growth capital, but going forward, how do you intend to fund that acquisition too?
So BLS International, first of all, if you talk about the IPO, our intent was that we see growth coming in both BLS International and BLS E-Services, which is a subsidiary of BLS International, and post IPO also it will continue to be a subsidiary. And we did not wanted to utilize the money earned in one company, another company. We wanted both the companies to grow separately. That was one of the primary reasons we got the IPO for BLS E-Services. The management decided, the money that will be raised, if you see the past trajectory, we've always been looking at growth, both an inorganic and inorganic point of view. So we have been continuously doing due diligences. We are a conservative company. The companies that we acquire, we want to acquire at a multiple of EBITDA times where we feel we can recover our investment within a matter of 6 to maybe 7 years. Get economies of scale, increase the profit margin. So same time we are already doing due diligence, looking at different companies, even in BLS E-Services, which can do cross-sell and upselling of products and services to our existing customer base, help us expand our reach in different states, are into different products or e-governance services where we are not currently present, are into different territories. And going forward, we also see that once we capture good market share in India, expanding globally for this business.
You're an asset-light model. You have good cash from your operations. Your cash flows are decent for the last 3 years. Debt to equity ratio also has come down considerably. So there are no worries per se from the balance sheet perspective, right? But going forward, if these expansions were to be scaled up in a very meaningful manner, would you prefer going back to the markets and perhaps raising in more money through debt? What's the strategy there?
See, our strategy is pretty straightforward and simple. We want to, have a healthy balance sheet always. Right now, the balance sheet that we have for BLS E-Services was pretty small. That is why we thought that IPO route will be a better option, raising equity. Going forward, we expect good cash flows. It is a negative working capital business. Cash flows to come from this business. So definitely our first primary objective is to fund acquisitions through internal accruals. But going forward, if the opportunity arises and if we see a good opportunity of growth, definitely we will be open for taking any leverage. But right now, across BLS International or E-Services, we have never taken any leverage. It's a zero debt companies.
Exactly. So what is the leverage level that you'd be comfortable with in order to scale up to the levels that you're looking at, if at all, if that's the case, to grow any aggressively, then what is the level that one can look at?
See, definitely, we have never taken a leverage till now, so I don't know what leverage level we will be comfortable at. But definitely, we want to always take leverage, which is a healthy ratios, where we can pay over our debt, the money that we acquire. We have more cash flows, to do the principal and interest payment. That could be, I'm a chartered accountant, so that is what I think it should be the ratio. But we have never taken debt again, so we have never discussed this scenario.
Okay, all right, then we're going to leave it at that. And thank you so much for taking out the time and having this conversation. Just to sum up, few quick highlights of BLS E-Services for better comprehending the business of the company. It is an asset-light model. The balance sheet is healthy of the company. It has grown in 3.5 folds in terms of the profitability for the year gone by. But right now, one can look at a bit of normalized rate of growth going forward to an extent of 20-30% when it comes to the bear case scenario, and roughly around 45 to 55% in the case of the historical track record that the company has registered. But that's the long and short of the company. With this, it's a wrap. Thank you so much for tuning in.